Cardano has had a successful year so far, as its first quarter report shows a 54% surge in its market cap from $8.6 billion to $13.2 billion. This made it the 7th largest project based on market cap, with Cardano's total value locked also increasing from $50.8 million to a whopping $138.3 million. That is a 172% surge in the first quarter. Established protocols like MinSwap and newer protocols like Liquid Finance largely contributed to this, and its total stablecoin value was up 261%. This is down to IUSD and JED stablecoins. So we've seen a lot going on for Cardano. We've also seen that some ADA whales have been stacking up more than 100 million tokens and added that to their portfolio over the last several days as we start to see price action deteriorate and pull down a little. Now, as we get into this video, we're going to be jumping down into the technical analysis for Cardano's ADA, and we're going to be taking a look at that price action and where I think things are likely to go. As I get into the video, smash that like button if you do find it useful, informative, or entertaining. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and you will not miss another video update. And don't forget to join us down in Discord. It's the central hub of everything that we do at Cheeky Crypto. So check it out, linked in the description below. Let's jump right down into this, right? We'll start off with our expectations from the previous video, which was a zigzag at bare minimum, and potentially worse if we were to think of this as a impulsive structure in the making. So we had our first 5-wave count to the downside, we had a little relief rally upwards, and we were saying that it's both possible that we come down and go up, but we're leaning more on the bearish side of things at the time, I believe. And we can see here that the expectation was to have this 5-wave move. We can kind of see it doesn't really marry up right now, so we're going to go ahead and delete that and then just see where things are going. Are we looking deeper, or are we looking to kind of just finish this off? Now, bare minimum expectations here have already been met. Okay, so our bare minimum expectation to the downside is already done. This happened when we moved down lower than the double bottom. That would have been 37.61. Okay, so we know that that's kind of done and dusted at this point. Typically, though, we normally would see these retracements come down a little bit deeper, more towards the 1 to the 1.236 fib levels. These are 34.16 and 32.54. So this little yellow box area just down here, essentially. It's a little off because I can't draw it exactly to the penny, but I'm going to see if I can. Can I? I can't. I'm just going to go type numbers in. It's going to be so much easier to type it in here. So we are looking on the higher side, 34.16, and on the lower side, we are looking at 32.54. I got close to it, just didn't quite get it there. There we go. And then what I'll do is I'll delete the fibs off. So knowing that, that seems to be our typical kind of A, B, C structure finishing, but the minimum expectations are already met. We could have a shorter C wave here if we needed to, so keeping an eye on the patterns. Ultimately, we're looking for 5 waves. We started with 5 waves. We've come down lower than the 5th wave now, so our expectation should be that we're looking for 5 waves within this area. And depending on how deep that suggests, depends on whether or not we go past this low area here, or whether or not we have to come down even deeper, which would be interesting for Cardano. So it's really difficult to see on the daily chart exactly what's going on. We do have this little area here. This could be a wave 2. It does look like we have a potential 5 wave in here somewhere. So I think what we'll do is we're just going to drop this down to a 4-hour, just to kind of review where we currently sit with this thing. And yeah, so by the looks of it, we did measure out a 5 wave move. We came up. We kind of see an interesting structure in here. We could potentially be looking at that as a 5 wave, 3 waves coming up here. Moving down, this looks like a pretty interesting structure in itself, coming down slightly deeper here. What we'll do is we'll just check that to see whether that reaches any key levels. It does not. Could have truncated though. We then come up in 3, that's okay. And then we end up with this little structure. Now this is interesting right here. So we go ahead and just move this over. Our expectations have almost been met, but we haven't come down to the 1.618. So we could be looking at diagonal within all of this, because it is a little choppy. This doesn't meet the requirement, I don't think. We bounce up. So we could be looking here at a potential diagonal. So let's come back up into our daily chart here. So this could be a wave 1. We haven't got a clean cut 5-wave structure. So this could be the beginning of a larger impulsion to the downside. So although we have this as our kind of typical 1-to-1 ratio on a zigzag pattern, this to me now looks less likely based on the kind of internal workings of what's going on here. So on that note, there's a few things to expect. If all of this is a diagonal, what type of diagonal are we looking at? Okay, so looking at it and just broadly speaking here, I'd say expanding, and it's expanding, and if it is, then that's going to basically be a little bit more difficult to get a good read on. Let's come back to our 4 hour, and if it's an expanding diagonal, let me just go ahead and move this line up a little bit here. An expanding diagonal has only really a couple of rules with it. Wave 5 has to be the biggest wave. Wave 3 cannot be the shortest. Okay, everything else is kind of, you know, a free-for-all to a degree. Now, we can kind of see here, we have a potential wave 1 here, and this wave 2 wave 3, sorry, would be shorter than our wave 1, I believe. So we can just use the fibs to kind of get a good read on that. I'm going to take it from this low side here to that high side. We're going to take this over to here, and as we're lower than the 1-to-1, then essentially we are less than wave 1, and that would be an invalidation of the expanding diagonal. Now, do we have a contracting diagonal? I don't think so. Yeah, I don't think we do. So that would be largest wave being wave 1, shortest wave being wave 5, with wave 3 not being the shortest. And so for the most part, I don't think that's going to be going on there. It could just be a leading diagonal, but then we have the 1.618 to contend with. So it's one of those. I think we're a little bit too soon to really know exactly what's going on within that structure. So again, we're going to have a little bit more data to kind of give us a bit of a bead and to kind of narrow down the options. It doesn't look good in terms of we're expecting 5 waves, but we can't see it. That could mean that there's one other possibility here outside of the idea that we've already started this move to the downside, and that would be a flat correction, or an irregular flat, or a running flat, and it would look like this. And in that particular case, we'd end up with a little 5-wave structure at the end here. Okay, and that would basically be how you would look at a running flat. And if we're looking at an irregular flat or an expanding flat, depending on how you want to talk about it, then we would be looking at a larger 5-wave structure, but it must be a 5-wave structure in the C wave. Okay, so if for a running flat, that's what we'd look for. That's one option as well, or diagonal options. Those are the two kind of things that we're kind of looking for. We're either looking at flat corrections or we're looking for diagonal corrections within here. We do not have the impulsion levels to look at it as a 5-wave structure just yet. So that could change this target range a little bit. So more data is required. I would not trade this one until we get that cleaned up, because it's too difficult to get a good read on that one from an Elliott wave theory point of view. Now, as we come up into smart money, we can see that we just lost the equilibrium area. We're below our 250 EMAs, so all of that is pretty typical. We do have ourselves a change of character that is bullish right now. That happened and got confirmed in the latter part of April, but we are looking at coming down into these order blocks. So it still looks like there's a little bit more room to the downside, only minor. And then, of course, you can see these sell order blocks up here. We have a weak high indicating that that is likely to see some kind of run up there. And we also have a strong low indicating that we are not likely to break the existing low at the moment. Okay, now two things are going to happen here. In order for us to change these two things around, i.e. to have a weaker low and a stronger high, we must rally upwards. Okay, we must come up here, fail to breach this high, and then come down lower than our swing low. And what that will do is that will change our characterization from bullish into a bearish state of play down here. Okay, that will then also flip these two things around so that we end up with a weaker low and a stronger high because we tested these highs, failed to push through it, and we then flipped into a bearish state of play. Okay, so there's a few things to kind of consider in there. Now, we have not got any fair value gaps on this note, on this daily chart at this level. In fact, we have got a few on the higher range. We will have to revisit those at some point in the future. So I'm not too concerned about those smaller ones at the moment. So for the most part, yeah, we are still looking at seeing some volatility within here, right? It does look like we need to come down in a 5-wave structure. We haven't done this yet. So it is all still to play for. Okay, so keeping a close eye on all of those things. Looks like there's some buy order blocks down here. And of course, our interesting fair value gaps that were not picked up by Lux Algo down in these lower ranges, 25 to 26 and 28 to 29 cent. And so for Cardano, those are the kind of ranges that we'll be looking for much later down the line. Now, from our bigger macro piece on the weekly charts, we are below the 250 EMAs. So although having a really strong quarter at Cardano, that has not translated to massive amounts of momentum for ADA's price action. This is no fault of ADA or Cardano. This is just simply because we own a bear market and we haven't actually broken into a bullish market yet. And therefore, you're seeing a little bit of FOMO, but it's nothing major. The volumes ultimately are not that great, which is why you do find that there's a lot of whales buying up some Cardano at these prices, because I do think these prices are pretty decent prices if you ask me my personal thoughts and opinions on that. Obviously, I'm not a financial advisor. I can't give you financial advice, but ultimately, my thoughts on the charts and my thoughts on the data are that as soon as we kind of come down into these low ranges, specifically if we come down lower than 30 cent, I think that's a really good deal on Cardano's ADA. Ultimately, we'll be looking at like 10x to the all-time high price at that point. Now, in terms of long-term price predictions and price thoughts, you kind of know where our mind is at. Lots of people have been calling me clickbaity. Essentially, it is what it is. The data is there. We can see a route to these numbers. Whether you like that or not is entirely up to you. I don't think we're going to go up to $116. Not within the next bullish cycle, but the number is there, it's plottable, we can see it. Now, in that structure, we might find ourselves actually doing a really good bull run, maybe hitting $7 or something like that, having a really weak kind of bearish market for Cardano, actually, i.e., holding its ground, and then we go up and finish that into a much higher range later on. So it could be 2 bull markets out. I don't know how to time this market. That's not something that we do here at Cheeky Crypto, but what we do say is that there's a route here in order to get to those numbers. You might not like the idea of it because the market cap might be really high, and in which case you need to learn about market cap, because market cap isn't really a barrier to anything. It is simply just a calculation on price multiplied by supply. So you can do that with anything. You can multiply the price by the supply. Take the gold market, the silver market, the platinum market, any metal market. Stock market slightly different. You have to treat market cap slightly differently with stock market. But for anything that has like a supply and has a demand metrics associated with that, you have to consider market cap completely irrelevant to the equation. It's there to just, in my opinion, to give you an idea of value without actually giving you value. And the reason I say this is you cannot liquidate an entire market instantaneously and actually extract all that funding. So you can have $1 trillion market, but it doesn't mean there's actually $1 trillion there. So if you're not familiar with how market cap works, you should probably do some more research on that. Join us in Discord. Someone will probably explain it to you there if they haven't done, if I've made a good enough job during the videos here to help you with that. But ultimately, we can see that price can move up. The only two things that really matter to this is going to be that we have a good supply and good demand. And what I mean by this is we need to see shrinkage of the supply, which we're just talking about. We see total value lock growing up 172%, I think it was, 172%. So we've seen very significant growth with the total value locked. That basically means there's a lot of liquidity that is being provided for DeFi and things like that. Stablecoins are helping with this, USD, 𝗕𝗘𝗪, and so forth. These are going to essentially help us by creating more liquidity, more total value locked, which locks up the supply, along with the staking mechanisms, etc. That basically means there's less ADA available for sale. Once there's less ADA available for sale and you see an increase in the demand of people wanting ADA, that's when you start to see really massive spikes in price appreciation to the upside. So it's important that we understand what's driving price, what's not driving price. Market cap doesn't drive price. Market cap is a reaction, or is a calculation based on price, which means it cannot be used as a barrier to price discovery. And the only thing you need to really focus in on here is how do you shrink the supply that's available for sale and how do you grow the demand. Figure those two things out and you've got a recipe for success. I'm going to leave this video right there. If you found it useful and informative, smash that like button. I really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with everything that we do here at Cheeky Crypto. Linked in the description below, and I'll catch you all in the next one.
We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.